And that is compounded by the fact that we're going into or starting brand new contracts. Today is the rollover day from the old June VIX contract into, or the expiration, excuse me, from the old June contract to the new July contract. So June is expiring today, and then July is becoming the front month. We also have the brand new contract for the indices in the September contract. That is also the third point here, compounded by the fact that we're in a bit of a no man's land up here. We had long setups going into our Friday morning and into the weekend, and we had a gap up and go yesterday, which was part of the uptrend that we were in as we were going into the end of the week, and we're just sitting up here in between essentially a profit target, a previous high, and a next measured move long in our series. What we were watching for as we were going into our overnight time frame was the 20 handle. And the reason that is important is because gap fill stats show us that the markets have a 72% probability of filling a gap inside of that 20 handle. And so we're watching for the edges. And you can see here that in the overnight time frame that 20 handle in the overnight was the 10. And that is a 76.10. The closest that we came to it was the 76.12. We didn't even make it past the 10 handle here to make it to our 20 handle above. And so this is kind of a dangerous moment for the indices from the perspective of there's no really stretched move that we have here, the 20 handle above or the 20 handle below, to anticipate a run back into the fill. It's just kind of a sideways choppy market. We're even looking for the squeeze up into resistance to reverse back down into the gap fill, or the run back into these extension long levels to run us back up into the fill. And we had neither. So it's a great example of, sometimes there's nothing to do. And when there's nothing to do, there's nothing for you to do. The dollar, let's go back to our leading indicators here. The dollar continues to weaken here inside of this, again, it's a shorter term intraday dollar weakness trade. And from our highs on Tuesday to lows, we've defended a short from that 99.791s to lows. Now, even if we were to break this setup, there's still a larger resistance level up here. Everything below the 99.559 is a dollar weakness trade. Bank, we're watching to see if it defends extensions. It came very close to breaking. That would be the very first sign that there would be something else going on besides the this kind of grind higher that we're in. The VIX has completed its profit targets. But as you can see here, we just kind of melted down, and then we've gone absolutely nowhere going into the Asian, European, and now into the NYSE Open. And below that 91.41, rounding up to 45, and then adding a tick, 1950 is a bearish below line in the sand. Everything below that is bearish for the VIX and bullish for the indices. As we move forward, it is going to be important to note where we reopen today on the VIX in the continuous contract, because then we will know where the old contract lows to new contract highs is, and where that VIX explosion has historically come from. Looking at this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.